Imagine, you could earn money while doing this. Or this. Or even this. Stop dreaming about earning. Earn while dreaming.
1, 2, 3, let's go. We're live, everyone. Welcome to today's Twitter space. I hope you are all doing well and you're having a beautiful Tuesday. Just waiting on the Twitter space for Glenn to come on and be a speaker. I'm on the company account because I haven't figured out how Fabio does that with 2 different accounts. So he was like, Julian, are you prepared? Do you know what you have to do? And I was like, of course I am. And then he's like, yeah, but you need like 2 phones, 2 accounts. I'm like, yeah, I have this all solved. Of course I haven't. So now I'm stuck on the company account because I don't understand how to start the Twitter space and at the same time talk with my account. So, yep, as you unmistakably have noticed, Fabio is still enjoying the beach life of wherever beautiful beach he's at on his well-deserved holiday. I think he's back tomorrow. On popular demand, we do have back Glenn, our Chief Operational Officer, though. We have quite some juicy topics to discuss. Obviously, going to discuss crypto regulation here in Singapore. There was quite a big announcement this week on that. What does this mean? Where are we going from all this? Obviously, we're going to talk about the rumors around Mount Gox dumping Bitcoins or not. And obviously, we're going to address Jackson Hole from last week. Feels like it's already a month ago, but definitely still very worth discussing. And what does this mean? Who has been selling? Who has been buying? Are we going to see the 10,000 now on Bitcoin? Is this the end of the second half rally? So all kinds of interesting things to discuss. So come in. If you're joining us for the first time, we're doing these Twitter spaces on a weekly basis. I'm the CEO of Cake DeFi, a CDeFi platform with very easy access to all kinds of cash flow from crypto. And we're looking at the market, discussing the goodies all around. We are trying to stay away from any kind of trash talk when it comes to... Okay, so, what do you think about Vitalik's hard fork?
Definitely the whole thing going on there.
Ready for the merge?
Oh, he's ready, all right. Yeah, I'm not sure if it's going to be work or stake, but yeah, we'll see. Definitely.
In case you haven't seen the picture, let me pull it up. Where's the picture here? Let me pull that up. Otherwise, you can just... I think he's actually trending. It's quite crazy. He's been trending on US Twitter with that.
What was the context for that picture, actually?
Because I have no clue.
Did not see it.
I have no clue.
Okay.
I don't know. Suddenly, I saw him trending on Twitter, and I'm like, Vitalik trending on Twitter? Like, what did Ethereum die? Did he crash? What's happening? And then I'm like, okay, let's just click. And I clicked, and I'm like, everyone's sharing that same picture. I'm like, what is going on? Yeah.
Fair enough. But okay, he seems to be enjoying himself on holiday. It's good for him.
He's having a good time.
Yeah.
I think all the people just posting, they're jealous that Vitalik has a girl standing next to him. And they don't. But dude, what about that hat? I mean, that was like the second reaction. I was like,
look, the man has a sensitive skin. He spends a lot of time behind his laptop indoors, so he just needs sun protection. Like I don't see the point in discussing this. Like, yeah, he's he's sensitive.
Love it. Let's get to some serious stuff. I think first topic we had mentioned is Singapore. I think there was this Bloomberg article. We're gonna link this all up below. Also gonna put the links under the Twitter space so you can click that. There's this Bloomberg article, Singapore malls making it harder for people to trade crypto. So obviously a lot of it was targeted towards retail investors. And then there's this entire kind of blog post published yesterday, 29th of August. Yes, the digital asset innovation, no, the cryptocurrency speculation. And it was the opening address by Mr. Ravi Menon, who's the managing director of the Monetary Authority of Singapore. So you can see this as the SEC here. And so the reason we're bringing this up is obviously because we as a company are situated here in Singapore, and obviously we have to adhere to the local regulations, and we are following those closely. You can read this there. I think obviously we've had quite some internal discussion. I also posted that on Twitter that we did get a request for comment from the MAS on all kinds of topics. They were not customer specific. We didn't reveal any individual customer data in that request. It was mostly around the services, staking, lending, liquidity mining, any kind of exposure, how much funds did we lose in that entire kind of insolvency over the last 3 months. Very straightforward answer on this. It's $0. And so just a lot of questionnaire. There was no individual kind of customers data request on that. I think the Financial Times reported on that in great detail. And so I just want to have full transparency for all our customers. That you also know that as a group together information, we also shared the asset allocation to various services, various coins. And so I just wanted to kind of bring this up here. I mean, you can read blog posts and the Bloomberg article yourself. Glenn, what's your assessment in all of that from what we discussed internally among the executive team, legal compliance on ops? What does this mean? How do we see this as positive? Do we see this as negative? What's the approach there?
Yeah, I think there was a lot to unpack. So just going back to comments from Ravi Menon, Managing Director at MAS, Monetary Authority of Singapore. Some of the words that he used were quite interesting. So Stephen, one of our colleagues, put this on the internal chat. He said that a lot of the retail investors are still irrationally oblivious about the risks of cryptocurrency trading. And actually, that's, it's quite a bold statement. Is the assumption that retail investors do not have the necessary knowledge of the dynamics of the coins that they're investing in, or the platforms, or even the products to actually approach some of the platforms. Obviously, I think Singapore has been a little bit unwantedly in the eye of the storm with Three Arrows Capital, with ZipMax, with Hodlnaut more recently, a bunch more of Singapore-based companies getting in trouble. So I understand the response, but at the same time, it's a bit contradictory because in the past, they were very open to crypto, pro-crypto discussions, pro-crypto legislation. But then this year, they started tightening quite a bit. So I think the first step was probably in January or so, where they said no more crypto advertising in public spaces. So not on trains or buses or MRT stations. So, okay. They're still advertising for regular brokerage companies, brokerage firms, so that's still allowed there. But crypto was taken out of the picture, and now I think they're even talking about some of the words that he used were actually imposing hurdles or imposing customer suitability tests. So maybe similar to what we see in traditional finance, like if you want to open a brokerage firm, brokerage account, on one of these platforms, you need to prove that you have either investor experience or that you are an accredited investor, which means you have a number of assets under management or you have done sufficient amount of trading. It kind of varies by region, but a lot of countries globally have that regulation that you need to prove where your funds come from and that you're comfortable managing them yourself. And so maybe we'll see something here in the future. That means for, I think, platforms like us, if we have to start doing a number of extra checks in our KYC process, it's going to be quite painful because how will we ensure that people actually know what they need to know? Will they have to take some tests maybe? Will they have to just indicate and kind of an honor code, if you will? Or will we have to actually ask for documents? And that's when it becomes really maybe a big damper on the business. So yeah, I don't know. What's your take?
No, I see this pretty much the exact same as, we had discussed this anyways. I can only but imagine how MAS must have felt if, it was one kind of Singapore-based company. Actually, they were not really Singapore-based. They were Singapore registered, but very few of these companies were actually based here. And so there was just a lot of, I think, negative limelight with Terra Luna, Do Kwon obviously being here in Singapore, and then 3 Hours Capital, and so on and so on. Hodl Not. There's just a lot of negative limelight, and I think the MAS actually had to react. I had actually assumed that the reaction was going to get way worse. So to me, that the reaction that they're doing is actually relatively reasonable in a sense where it's really balanced. So I feel it's really reasonable. I would have actually expected them to be way harsher and really kind of clamp down right away. I mean, I still remember, I think for someone outside of Singapore, it's very hard to kind of imagine this. This was, I think, 3 years ago or something. Like we had these electro scooters in Singapore, just like pretty much any other city had. And there was this one really unfortunate accident where this young kid, and I think that kid was even drunk, but this young kid ran over this elderly woman, and then that elderly woman died from the injuries. Really, really unfortunate. But on that one instance, the government just goes and says, from one day to another, all the scooters are banned. Like one day to another, right? And so it's like a really, really kind of aggressive measure from one day to the next. And so to me here, I was kind of prepared for everything. I was kind of prepared on, okay, from one day to another, do we have to kind of exclude all Singapore customers? But actually, it seems quite reasonable in how they approach that. I actually think Singapore is going to set the right direction there, where Singapore is one of the few kind of jurisdictions in the world where there's a crypto regulation, there's a crypto framework, there are money laundering regulations, money laundering framework, and hopefully it sets the bar higher for companies to kind of get established here. And so when people look at a company like Cake and they know, it's from Singapore, they're like, okay, it's not just like any company gets signed up there and does whatever. No, it's like, hey, you can expect a certain kind of standard. So I think that's actually quite good.
Yeah, and it's interesting that you mentioned Terra Luna, because there was also a specific mention about stable coins, in the sense that I think government is potentially looking at requiring a minimum amount of package, the backing for the stablecoin. So what does that mean for an algorithmic stablecoin like DUSD, for example? Would that still be allowed here in Singapore? Would it still be offered to Singaporean customers? Or potentially restricting like leverage. So you sign up for a crypto platform is okay, but you cannot be crazy and lend against your assets, or at least not until you've proven that you have sufficient amount of trading experience, for example. I mean, it looks good on paper to think about that, but in practice, I think it'd be very hard to really implement or to prescribe for companies, because we know nowadays with licensing available in many jurisdictions, a lot of companies will probably think about just shifting their customer relationships to another jurisdiction. So it's a thin line, right? Like you have to balance as a government between innovation and keeping the industry close, thinking about the applications of blockchain, but at the same time, you want to ensure that you protect your citizens, and you want to make sure that they don't go bankrupt with some of these platforms, or they don't lose their life savings. So yeah, it's a bit of a double-edged sword here. I'm not quite sure how this is going to turn out, but I think the good thing is, as we said last week as well, a lot of communication, I think, between MAS and the industry and the partners. So I think they will be very careful about establishing rules and making sure that they have a point of view that is not going to kill off the businesses that operate here. So yeah, I think that's a positive.
One interesting thing that I found, let me just share that, is actually an analysis over the next couple of years, which kind of country is going to have the highest percentage of millionaires. And Singapore was on there, and it's actually number one. So Singapore is by population supposed to overtake all the other countries. I think the reason I'm kind of pulling this up here is for a very specific reason, that with that, many times when you have, like in this case, 13.4% of the population is predicted to be millionaires. I mean, it's really, really high, right? I mean, the normal kind of percentage, right, is more like in the 1 to 3%. So here it's like almost 10 times higher than in the average kind of population. I think the country with that also really has to be very kind of cautious and careful with a population divide, right? We're going to discuss this a bit later, where we're talking about like the death of the middle class. I think this is something that to really address. And the reason I think crypto always comes into play. And I actually had just a discussion now over this weekend. We had some friends over on Sunday afternoon, and there was specifically one of the parents there who was talking to me about, well, like that person said, hey, I have $10,000 on the side. Like, is this something that they could see? Like, they know that I'm in crypto. Is this something that I could see that could make them a millionaire or something, right? So I do think there's going to be quite some expectancy or some carefulness, right? That any kind of regulator also has to come in when you see this a bit of a divide, and then you see people who see this possibility of almost like lottery tickets, and so. I just felt this was quite important here. This fortune.
Underlines a little bit the financial stability, I guess, in the city or in the country, because there's a lot of influx of wealth from other nations, especially what we're seeing in Hong Kong, especially what we're seeing in China. I think a lot of those folks are interested in parking some of their funds in Singapore, which is why I think the percentage here is definitely higher. So, but those funds need to be put to work. So a lot of them want yield, a lot of them want to invest in banking products, and are asking their banks actively to also have opportunities to go into crypto and to go into DeFi specifically. So it'd be interesting to see how this trend then pushes the traditional finance system to actually kind of converge with the crypto world, and how Singapore then will respond to that. Because how do you value assets on the balance sheet in crypto? How do you regulate access? How do you do the KYC? Who's responsible? A lot of the wealthy individuals might not want all of their credentials checked, or might not want to disclose some of the sources of their wealth. It's going to be interesting to see how that plays out.
Yeah, for sure. Let's move on to the next topic. The entire kind of development last week around Jackson Hole. I think Fed Chairman Jerome Powell kind of put the markets into a bit of a tailspin. Markets really kind of corrected heavily, and not only the crypto markets, but also the general markets. I think it's something to address. Reflect a bit on, and a couple of data points that I also kind of pulled up that I want to show a bit here that are quite interesting on who could actually be selling here, right? Who was the ones who were selling? Are these like institutional people? Are these more the speculators? There's quite some nice data. I don't know, Glenn, do you want to kind of start off? Is there anything that where you want to take start, and then we can just kind of go step by step.
Yeah, sure. Let's talk about the magnitude of the impact first. I don't think there's a lot of 8-minute speeches that erase this kind of market value, both in equities and in crypto. I think it was a strange speech, I think, because a lot of what was said, that the Fed will continue their kind of aggressive policy to kind of chase down inflation. There's nothing new. We kind of expected that, but I think some of the words that were used and some of the terminology was a bit aggressive. So talking about unusually large increase upcoming in September, for example, and continuing with the restrictive monetary policies. There were some references to, I don't know, times of the past. Jerome Powell said, hey, we've learned our lessons in the 70s and 80s. We understand now how to manage this inflation. Banks need to be held accountable, so they can and need to contribute to keeping this inflation down. But also importantly, we need to make sure that people don't panic. Need to make sure that people understand that inflation will be there for a while, but that we are actively addressing it. I think we may be seeing a little bit what happened last year with the opposite policy, where there was a lot of money being pumped into the system. The liquidity made its way to the markets and just kept ballooning the valuations. I think now we're seeing the same, but on the opposite side. When does the Fed stop regulating, I think, the inflation? Because inflation always takes time to correct. The monetary policies they're putting in place now will have effect 2, 3, 4, 5, 6 months from now. So if they're continuing to go very aggressively based on the data today, I think we might see the same thing. There might be overcorrecting again, and then start of next year is not going to be pretty. So that's maybe my summary of the call. What was your take? What was your understanding?
Yeah, I mean, I completely agree here. I think nice chart here on expectations of the fund rate at the moment. So, I mean, at the end, market is kind of pricing in now for sure the 75 basis points in September, 25 in November, December. And then I think the February one is not entirely sure if that's going to be a 25 basis point, but that's kind of people are expecting. So we should be ending at about 4% in February. And then, we kind of, up here then in February at 4%. And then the question becomes, what's going to happen afterwards? I think, and that's also quite interesting from the data a bit, is if you look, for example, I mean, obviously the rates here really kind of had an impact. So the number one asset class when it comes to those rates that is like super sensitive are bonds, because bonds have no upside on the principal in theory, right? There should be no principal upside. So the only thing that bonds react to is kind of a Fed funding rate, because if the Fed funding rate goes up, bonds that have already been issued should go down in value for the simple reason because their rates should be lower than the new bonds. So people rather want to have new bonds than the old ones. However, if you then look, for example, 20-year treasury bonds in the US, they did correct a little bit from like Friday. But if you kind of look at the entire kind of day, it's pretty flat. So bonds did not really correct much, especially the more longer duration bonds. Now, why do I think that that's really relevant? It is really relevant that the people who really kind of got blindsided here are really the speculators that thought that everything was going to be fine, everything was going to be healthy. They were like, this is now over. Like in the past, these kind of setbacks, they took like 3 months. And so now it took kind of like, maybe it took a bit longer, or like 6-7 months. But, now we're out of the dark and we can all go now. And Biden said there's no recession, and the media kind of just kind of regurgitated that. So it's all good. And everyone is kind of forgetting that the majority like of the major reason for that pump that we have seen, especially in July and then also in probably like beginning of August, was mainly around that it didn't turn out as horrible as some had expected, right? So it was less horrible. And so something being less horrible is generally a very bad reason for things to pump, but it's very natural that for this is a reason for that to pump. And and I think those kind of speculators really kind of got blindsided a bit. They got blindsided by how strong the US dollar is at the moment. The DXY is getting to a 20-year high. If we kind of break out of that channel here right now, I mean, we can see the dollar strengthening by another 10%, which is like really unfreaking believable to even imagine. Like that, basically, if the dollar strengthens by another 10%, I mean, this just means that pretty much all the assets sell off by way more than 10%. It has nothing to do with the assets themselves. It's just that the measuring stick here becomes stricter and harder to beat, and so everything kind of sells off even more. And that's just incredible to kind of see and imagine. I do want to really highlight, though, that from the kind of professional investor kind of mindset, not much actually happened. I think those that started buying, I think none of these investors, including myself, and I also started buying in July, August, none of us, I feel, were buying just because we expected now that we're going to see new all-time highs, so we're going to see like 100% rallies here. To me, this is long-term looking or interesting kind of buying moments also in very valuable companies. I think this makes a lot of sense. You saw Buffett being super aggressive on certain positions, and I don't think a Buffett kind of thinks in weeks terms. I think Buffett also thinks in very kind of long-term time horizons here. And so I think that's a key part here. So I think in some of the Twitter spaces with Fabio some time ago, I'd mentioned several times that I think the second half of this year is going to end higher than we ended the first half of the year. And I actually still believe that. But I also want to be very clear, right? We're not talking about 100% higher or something. We're just talking about higher. So that can be just a couple of percent higher. And again, I also would not be surprised if we see like relatively positive data from Q3, and then people are like a bit more optimistic. But the people who mainly sold right now were not the professional kind of investors. It was those that were like, so everyone is on a rally now. Let's go in, and then suddenly it turns around. It's like, hey, this actually does not sound so good. The dollar strengthens, and that kind of corrects everything.
I think one other element that I just want to mention here was read it on bitcoin.com on the news here, is the correlation. Correlation between the equity markets and crypto markets at this point. So price of cryptocurrencies moved in sync with US stocks, S&P 500, Nasdaq, and it's now the strongest since 2010. So it's really interesting to see that first equity markets sell off on Friday between 3 and 4%. Tech went down, I think, a little over 4%. And then over the weekend, like crypto just follows. So there was a 6% drop, I think, on Bitcoin on over the weekend. So it's kind of interesting that it's now perfectly in sync. So what will happen over the next couple of months will play out in both markets at the same time. So if we see the equities continuing to go to lower, then I think we might see continued pressure on crypto, and the people who are betting against some either direction could be caught out. So I did see a couple of people trying to bet on crypto going to 10,000, like as is our title for today. But then there was a bit of a short squeeze as there was a rebound around just under 20K actually. So some people already got margin called, and there was a bit of a push upwards. So be interesting. Yeah, the dynamics are quite interesting. Have you seen something similar over the last couple of crashes? You've been in this space longer than I have. So any comparables that you go back to when you see this kind of market behavior?
I mean, I have always stated one thing that I still think is completely true. Even though we have been very consistent with those 4-year cycle crashes, I think every one of those 4 years cycle crashes in crypto actually has nothing to do, and it's just being fooled by randomness here. Very first kind of crash had to do with Mount Gox. The second one had with the implosion of the entire ICO bubble, and that crash right now purely is general market driven. And we have not seen that general market drivenness in 2013, 2014, and then 2017, 2018. It's completely new. And so I don't want to say this time is different. I still think there's going to be a very high chance that 2024 is that year when we see that turnaround, similar how what we saw in, well, 2019 was already a bit of a turnaround, but then 2020 was like with the halving and obviously with a lot of money printing, just kind of brought a bit of a turnaround. I wouldn't be too surprised if again in 2024 we actually going to see that turnaround. But it's probably going to have more to do with, well, Bitcoin halving, maybe the economy has to recover, presidential election in 2024. I think that's way more relevant than maybe the 4-year cycle that some people are going to talk about in crypto. So I have not seen something like this before. I kind of warned a lot of people that I think none of us that have been investing since 2008 have seen this before. I mean, I'm not sure if anyone in the last 40 years has seen something like this. I spoke with I try to talk with many like successful investors. I have not met many people right now who are like, oh, I have a very strong plan on what to do. I think anyone I talk to right now, they're like, look, I've not been in a situation like this. I have no idea. I'm just trying not to be wrong here. Any kind of bet I make, I try to like err on the downside, or try to err on the cautious side. I try to like not be too aggressive, and so yeah, I don't know many people right now who have these really strong opinions. To me, the people with the super strong opinions are generally those that have absolutely no clue about investing. They're like more of a like religious sect follower of whatever crypto or stock investment or whatever kind of following they're in, and they're people with really strong opinions and based on very little merit. And so yeah, I think it's times right now where any overexposed investment, and I just want to be very clear, to me that also means fiat, right? If you're really overexposed into dollars, it's also a very clear investment. So just be very cautious with any of that. Good diversification, being more on the cautious assets within that diversification, I think is a really, really good kind of decision making at the moment. And yeah, I think they're really difficult. I think it's not a time right now where you should be expecting the really high returns. It's the you should be hoping or kind of settling for like saving like your purchase power as much as possible. And and if you're sitting here and you're like, yeah, that's great, but I missed the run over the last couple of years, then my answer is, yeah, boo hoo. It's not you who is making the market; it's the market who makes the market. And at the moment, the market just makes a very, very, very difficult market to to put your purchase power to work and for your purchase power to multiply. It's just very difficult. And so, yeah, my liquid portfolio is down year to date. And I mentioned this at the beginning of this year in any of the Twitter spaces, that if I can have green numbers this year in my portfolio, I mean, I'm super happy. At the moment, I'm down. Let's see. Yeah, still a couple of months to go. I don't know. Anything to add from your side?
I mean, if you'd be up in your portfolio, I would just give you my money and then you just take care of it. Like,
I would be quite dubious. I mean, to be honest, I think okay. So no. Okay, so I want to be very clear here. And again, I know actually, I know people who are up with their portfolios, right? And it's very predictable that they are up. But the question then really becomes: are these smart investments? So I mean, all the commodity funds or the commodity investors, they're up this year. I mean, and so the question always is: do you want to invest in funds that mainly speculate in commodities, which 88 out of 10 years are down, and then 2 out of 10 years they are up, but they can never recover the 8 years, right? So the question really is this something that you want to bet on? Because this really means you need to have dramatic like market timing. So these funds tend to be like up. Obviously, all the short funds that are, again, getting slaughtered for the last 11, 12 years, and now they're having like their kind of every blind chicken every once in a while finds a little corn or something, and that's kind of the same there. So I mean, all these short funds, they are up, and then the algo funds, right? But then the algo funds, it really kind of depends if you really would have stuck in. And I don't know if I shared that story here on a Twitter space or in one of the German videos. I'm not 100% sure. So I have this really good friend actually in Singapore who closed his algo fund last year. And the reason he closed it was because like all the investors were fleeing his fund because they were like, oh man, you're like up 28% only. And what am I going to do with 28%? Like everyone and their freaking brothers and sisters without any clue is like in Bitcoin and they're all like making 100%. And like your 28%, like, why am I even giving you the money? Right. And so he had so much outflows last year, actually all of 2020 and 2021. I mean, he had fantastic years if you think about it, but it was just completely underperforming what like the meme stocks kind of made. And
Crazy.
so he had to close the fund last year. And so then I'm like, and so what are you doing? He says, well, you know, I'm running my own little personal portfolio, but I don't have the fund anymore. So, and I'm like, yeah, what strategy are you using? Man, I'm still using that like same algo strategy, like a lot of market neutral strategies. And I'm like, and how you doing? And he's like, man, I'm up 6%, right? And so I'm like, yeah, imagine, right? And it's like, it's such an incredible reminder how difficult it is. And I mean, I actually think he's going to be up even more. I mean, that was probably 2-3 months ago that we spoke. So, and he was up when everyone got crushed. And so it's such a good reminder how difficult it actually is to run a fund because people are so irrational in their decision making, right? They compare themselves so much to other returns and to friends and to other peers. And so, I mean, you see this in the crypto space as well. Like, I mean, there's a very famous quote, right? Which is like, are you happy if your coin is up 20%? Well, only if the other coins are not up 20%, right? If the other coins are up 25%, you're unhappy. And that's the crazy truth of the matter, right? So you're not like, people don't like look at what they have. They always kind of compare themselves to everyone else. And so in this case, right? I mean, it's crazy if you think about this. Man, I don't know. I don't know how often I had this discussion, how difficult it is to actually compound 20% year over year over year. And then whenever I said that, right, people are like, oh yeah, I mean, I don't know what you're saying, but like, you know, you would have just had to go into Bitcoin and Bitcoin would have just compounded you like, I don't know how much more. And so my answer to that is I'm just going to forward you actually the answer to a very large, one of the largest VC funds in the world. They have a Southeast Asia office. I'm very good friends with one of the managing partners there. And I talked to him about why the fund had actually never invested in Bitcoin. And the approach was very interesting for me. He said, basically, the Bitcoin was really early stage all the way until like 2013. So that's like super early stage. That's like you investing into an early stage startup. You have no clue if that thing is going to survive. You're expecting probably like 1,000x returns, right? So that's kind of what you're expecting in such an early stage. But most of the investments would die. And then you had like the the kind of late stage investments, so like the pre-IPO investments, which were like all the way until like 2016. And then from 2017 onwards until today, that's when what he calls like the public market Bitcoin. And so the reason why I found this so interesting is because he says, look, that's completely relating to the returns. And then he says, and now go and compare, like very simple, compare public market returns from 2017 until today, and you'll see Bitcoin is not doing anywhere close to as well as you would think it does, right? He says, just look at Tesla. Tesla smashed Bitcoin during this time frame, right? And sure, we're picking now. No, we're cherry picking, sure, but like it's crazy, right? And then they said, and then they kind of highlighted some of their own investments that they made in 2009, right? And I'm not going to mention the investments now because then people would know instantly who I'm talking about, and this is really unfair. And I mean, they also like we are smashing the returns that like we would have made way more than 20,000x on Bitcoin with our investment there, right? And it's absolutely true. It's absolutely crazy. I mean, people invest, I don't know, $100,000 and they return billions of dollars in their kind of investment. And yeah, so the reason I really want to bring this up is because when people come up and say, oh, you would have easily made 20% returns, then first of all, like, yeah, you may, if you had actually held all the way through. And then we're just talking about 10 years. Your life is not 10 years, right? Your life is hopefully another 100 years. So you need to kind of have a strategy and how you're going to compound your purchase power for the next 100 years, 20% a year. And this is just a totally different ball game than I think most people are aware of. And they just get totally kind of brought away when then they see like people making 100% left and right and they're unhappy with 28%. So
yeah, one of the things that comforts me as a very average or less than average retail investor is that some of these big funds also make mistakes, right? Like if you look at SoftBank, for example, I don't know if anybody's seen that graph. It's incredible. It's like this incredibly steep mountain. They've turned, I don't know, like a few $1 billion into $100 billion and then right back down. So they've ridden it all the way up and all the way back down. So when the portfolio is doing well in a hype cycle or in a growth cycle, it's easy to be a very good investor because then whatever you pick is going up. But it's the contrarian picks that obviously are thriving now. We have a friend here a couple of years ago. I don't exactly remember when, probably let's say 2.5 years ago. He was trying to convince us to think about uranium as one of the precious metals. He said, we need to think about power long term, and we need to think about the need for uranium in the world, and it's such a precious resource, and you need to preempt that growth. It will come. We need to preempt that growth. I mean, obviously 2.5 years ago, we were all making fun of him. We were looking at the returns. We're saying, come on, this is flat at best over the last couple of years. This is not going anywhere. And then obviously we kind of kept tabs on that. And yeah, for the foreseeable future, 6-12 months, it went nowhere. And so we're like, see, what are you talking about? And then all of a sudden, uranium jumps crazy amounts and just in especially in a downturn like this goes up like 3x 4x and then now it makes sense, but at the time when every bull was running, it did not make sense. But it's kind of when do you get into which parts of the market? I think that's if you can manage that well, then okay, then you'll be a very wealthy individual. But I think for the most let's say for most part of the retail investors, we're more like long-term hodlers because we have to. I don't think the timing the market is so complicated. So I wouldn't beat ourselves up over red numbers this year. But let's hope we get back to green at some point.
100%. And then again, I think going from the macro a bit more into the micro, then obviously on top of that, a bit of a bearish kind of sentiment in the general markets. We did see some micro FUD in the crypto space. It basically all stemmed from some relatively old coins. So these are Bitcoin transfers. This is from JA_Martin on Twitter. You can follow him there if you want to, just for reference and where I have that screenshot from. There's some relatively old coins in the age band 7 to 10 years that suddenly started to move over the weekend. And obviously the people were like, hey, isn't end of August supposed to be that Mount Gox kind of release of the coins. Is maybe that is part of that entire kind of release cycle, and relatively quickly, kind of influencers and then the media started to jump onto that, and there were like all kinds of rumors that the Mount Gox coins are being liquidated and being dumped. 137,000 bitcoins, and people really started to panic a little bit. The sell-off really became super aggressive. Just imagine, I mean, look here, basically as Ethereum pumping 10% on on this
On
picture
the
here,
hard fork.
on the hard fork. I mean, it's just incredible, right? I mean, gotta give it to Vitalik. He got game, yeah.
The man knows
So
how to market. Yeah.
and he really does, yeah. So obviously, with that, then Bitcoin sold off, actually dipped under 20,000 even. You can see this here on the graph. Pretty much over the last 7 days, everything became minus. And the crazy part here is, and that's always the nuts part, right? That like literally everyone who reported on this was completely wrong. There was absolutely no merit on to that story that the Mt. Gox coin got released. And the thing is, I mean, and I understand where this issue is coming from. First of all, a lot of clickbait, a lot of very easy to sell kind of news. But if people would just talk to people who actually are waiting for funds from the liquidators, right? And I mean, we have people in our company who wait for funds from there. There's people on Twitter who wait for funds, right? And they can attest to that and verify that there's not a single Satoshi who was paid out from there right now. But still, people panicked. It all kind of went haywire from that. And that was quite a bit of a chaotic kind of time in that. And so, yeah, and I mention this example all the time. I just want to kind of put a bit of a reminder to that. I always think that markets function a little bit like relationships. And if you're in a relationship where everything is working well, you trust each other, there's love, there's passion, there's this like the sparkle is in the air, like if then, I don't know, your girlfriend, boyfriend, husband, wife, whatever, gets a weird picture or like a weird message, it wouldn't concern you. Like you're like, I don't know, like some spam or whatever, right? You just write it off, and it would be the same. And if the market was like super stable, and that would be like this FUD, people instantly on Reddit and on Twitter be like, this is just a FUD. But obviously, if the relationship is already a bit like shaky and difficult, and it's already a bit broken, like that can just be that last straw that breaks the camel's back. And I think in this case, right, you really kind of saw that. You saw this really aggressive sell-off. On top of the general markets obviously really also crashed. And so, it to me, like if you then look, I mean, here, these are the current numbers at the moment. This is the entire history, basically all the way back to 2013. August at the moment sitting at minus 14%. July is this kind of plus 17% months, relatively strong. And now, a lot of people getting scared because they always call Septembear, like it's the bear months for September, because it's generally one of the most bearish months that we can see. And one thing that I hope is not going to happen, but like if you just kind of think about history rhyming a bit, this is 2018, relatively negative August, negative September. You look at 2014, negative August, negative September. So this would be kind of a bit of the similar kind of timelines if you believe in the 4-year cycle. So I also maybe want to say that, many times when people expect a month to be relatively negative, that it may actually not be because, if everyone is pricing it in already, there's no one else left to selling. And then there's some good hope in general. Q4 is in general, always one of the more bullish kind of quarters. Even in 2018 was nightmarish. 2014, I wanted to say, I think at least we didn't get totally killed. There was 1 month that was still bullish. So that's kind of the hope right now, that maybe people are pricing in September a bit wrong. The institutionals, especially on GBTC, there's a record discount right now. The record discount is in GBTC. It's also in GETH. So GETH also starting to discount here. So people really, also on the institutional side, I mean, they are, so basically, if that thing goes back to parity, you would just be making 50% back to parity. Here's the key thing though. Now and this just shows once again how people don't really understand how the markets work. I now have people who are calling for the SEC to finally approve that ETF. Again, if they would approve that ETF, we would have so much sell pressure on the spot price of Bitcoin, because there would be so much arbitrage out of that GBTC. So that is just absolutely destructive. Like that would really kind of send Bitcoin, in my opinion, into a real tailspin. So I really hope that there's no approval right now of the Bitcoin ETF, but actually the approval happens when there's a bit more positivity, and then maybe that discount kind of starts disappearing a little bit. Maybe we get into the 20% range, 15% range, and then the arbitrage wouldn't be as strong. So, people really gotten a bit shaken. There is some pessimism now here in the market. Again, I think a lot of it, people kind of change their mind here like they changed their underwear. So that's just a bit what we're seeing. Glenn, how do you kind of perceive that a bit? I don't know what you have been following, who you have been following. What are things you see there?
Yeah, I think the sales behavior is very normal. So because people have been punished for 3 months in a row, and then you get a better month, but things go up a little bit, and then as soon as we start seeing signs again of another sell-off, then we just naturally assume that okay, maybe it's another cycle. Let's get out this time. Let's avoid it this time. Like pain is a very powerful motivator. So I think the hurt that was felt over the last couple of months is now playing into the decision making. But for Mt. Gox specifically, I think we also need to do just a little bit of contextualization, because in terms of how much pressure that would put on the markets, there's 140,000 Bitcoins that need to be sold. $20,000 a piece, that's $2.8 billion. And daily Bitcoin volume is anywhere between 20 and 30. So sure, that's going to be a bad day. Might be a bit more selling pressure, but it's also not going to completely tank Bitcoin, right? So what Mt. Gox was in the past, a decade ago, is not what it is today. Like the markets have grown quite a lot. So the impact, I don't think, is going to be as dramatic as what people may be projecting. So just a bit of, easing the nerves on that one, even if it happens. Plus, it will not happen all at once. Let's all agree on that as well. So they will sell it off in pieces. But even if it were to happen all at once, it should be fine. It should be okay. Yeah.
Yeah. I mean, I would hope not, but yeah, sure.
Even if.
Yeah, of course. Cool. That's it, I think, at the moment with the main topics that I had. I don't know if there was. I actually also looked through our Twitter account on what did we post. There are. I think next week we gonna have some product updates. We discussed if we should announce them today, but I think it's better. Let's just wait for next week. I think it's a bit easier. So let's do that next week. I think then we have a clear kind of market update today. From the update side, I think really like we're finishing August. Fingers crossed that it's not a Septem-bear, but maybe it's a whatever Septem-bull, and then see how that kind of goes. Anything from your side that we're missing on, Glenn?
Do you want to go into NFTs for 2 minutes, 3 minutes?
Man, sure. I don't have the slides prepared unless I can pull them up in the meantime. You make your intro in the meantime. You discuss it. I mean, this is really. I know what we're going to talk about. What we discussed over a breakfast meeting today. Let me pull up the things and you kind of discuss it in the meantime.
Yeah, so it was on the docket for last week. So last week there was a topic, Brand DAO, which was putting some selling pressure on the whole NFT market, and people were questioning, like, is this the end of NFTs? So Brand DAO is a platform where you can get leverage based on your NFTs, and especially if you have blue chip, like Bored Apes or CryptoPunks or any of the, let's say, the larger categories, the tier one, let's say, you can have up to 40%, I think, that you can lend against the value of those in the market. The tricky thing started when Brand DAO, the way that they work is that they put let's say, a score against the NFTs. And if floors start dropping, or if in their scoring mechanism, these NFTs are no longer worth what they were worth before, that means your leverage percentage goes up, and some of them were starting to get liquidated. So interestingly enough, some of these large blue chip well, blue chip is maybe an overstatement, as we will talk about in a minute, but some of these larger, well-known NFTs all of a sudden were being sold off. And I think a lot of these owners did not have any intention of selling. So that puts pressure in two ways, because one, you get liquidated, and so obviously positions get closed. But secondly, also it drives the floor down on some of these collections, and then the whole value of the collection goes down, which then puts the whole NFT market under pressure. And so,
so let me put up the links here. So this is the Bloomberg link: rising Ether price, spark liquidity crisis, and then this is up and down.
Yeah. And so then that kind of, I think, moved into what we were talking about today and what you brought up. Maybe I'll let you take this one.
Yeah, I thought that was quite a crazy one. So Glenn and I have, with all the kind of executives in the company, I do catch-ups on a regular basis. Glenn and I generally have a once a week kind of breakfast catch-up where we just discuss business, and then we talk markets, we talk personal stuff, right? There's a good friendship, so like everything is kind of intertwined there. And so then I was like, hey, I saw this really insane Cointelegraph article. Yes, and I mean, I had the timeline wrong. I thought it was months over months, but that doesn't really matter. I asked you, what do you think it's months over months? But at the end, it's 90 days. So what do you think the NFT volume is down over the last 90 days? So how much do you think it's down? And I don't know, what was your number that you had guessed? I can't remember, 50% or something?
Yeah, 50, 60, yeah.
Yeah, 50, 60, and it's down 99%. So I'm going to link up the Cointelegraph article. It's absolutely insane, right? It's crazy. So just imagine this way, right? They're doing 400 million on one day in May, and then basically it just drops to 5 million, right? So it's like 99% down. It's just absolutely bonkers. You're the CEO of a company, in this case, OpenSea, and the volume is, and I mean, just imagine suddenly your revenue like disappears. It's gone, and I just thought that was absolutely bonkers, and it just kind of underlines, the massive kind of speculation issue. The entire market at the moment is a bit suffering. So I don't know, that was at least a bit.
Do we know what their model is, like what their percentage is on some of these transactions?
I think it's pulled up somewhere. Wait, OpenSea business model. I think they're making like 0.5% or something.
Okay.
Yeah,
so if you
I'm
go
not sure.
from
With
a
this
day,
OpenSea business model, you can even analyze it. Not 100% sure. I think there's like a sign up fee, and then there's like whenever you want. It takes a 2.5% service fee.
wow.
So 2.5%. I mean, it's quite a lot, but I mean, yeah.
So that means if you're selling 400 million in a day, you're making $10 million in terms of service fee on that one day. And then now, end of August, you still have to pay your staff. Sure, there's been some layoffs, but you have all of your cost and infrastructure that is now scaled to a level where you want to accommodate 400 million per day. And then all of a sudden you're doing 5 million a day. That is painful. That is... unfortunate for the folks who work there also, but let's see.
And it goes like revenue goes basically from close to what, like probably 10 million a day to 100,000 a day. I mean, still 100,000 is 3 million a month, but depends on what your costs are. And if your costs are based on you making 100 million a month in gross revenue, and then suddenly you're not, like, you're making just 1 or 2 million. I mean, that's completely, I mean, that slaughters you, right? I mean, it's insane.
Yeah, it's even worse than what's happening to Coinbase. So Coinbase obviously also needs trading volume, and in bear markets, that's obviously down. So we saw their numbers also being down. So I hope for OpenSea that they have a sizable treasury at this point, that they've not done any stupid things with the...
I doubt it, but I hope.
Hope for them. I really hope for them. Like, I mean, it's a good platform. It's a cool platform. The true value of NFTs we still need to discover. I think we're all aware that it is not necessarily now in these hyped up collections, although some of them were at peak, like being shilled to really big celebrities, and also kudos to whoever did that and sold. But I think there's still a tremendous potential in NFTs, but I hope for OpenSea's sake that they can pivot into something more useful as a business case. But good luck.
Yep, absolutely crazy. Cool. I think with that, let's bring this to a close from our side. Thanks so much for joining. Obviously, if you're not a customer on our platform yet, go to cakedefi.com, sign up, participate on the bonuses, get cash flow on your crypto completely transparently with the number one DeFi platform in the world. We are as transparent as you possibly can be, with the advantage of having handholding with all those services. And then, also we're hiring, one of the few companies still hiring. So go to cakedefi.com/jobs, check us out there. And would be great if you join the team. Glenn, any famous closing words here?
No, I just want to say I look forward to having Fabio back next week. Like as much as I enjoy doing this, it's also quite stressful. And
then we should definitely do a group. I mean, in the new office, we should. I mean, we discussed this today. In the new office, we're gonna have like a special recording room for stuff like that, and we can do this in person. I think it's gonna be super nice.
Yeah, and it'd be great, I think, for the community as well, and for the people on the call. Like, if you send us, suggestions of who we could invite, I think it'd be fun to have some guests on the Twitter space, or even if we do a podcast in the future, like who should we definitely talk to? Like interesting folks for us to connect with, to kind of broaden our focus a little bit. I think that'd be cool. So once we're in the new office, we have our own recording studio set up. The quality of the production will be tremendously increased. So then, let's talk to some cool people. I think that'd be nice.
Awesome. With that, everyone, stay safe, stay healthy. Thank you so much for joining. Please like, subscribe, follow, leave us a positive review, comment, all the good stuff. And then see you next Tuesday for the next show. Thank you so much.
Thanks, everybody.
Bye, everyone.
Bye-bye.